One of the most common questions that I get almost every week or every day almost is, Denzel, what is a line of credit, man? What the heck is this thing? How do I use it? How do I go about getting it? What are the different types of lines of credits? What is? All right. You know what? I decided to dedicate some specific videos to just the line of credit. Okay, where I'm going to break this up into multiple videos and really give it to you everything that you need so that you can go get that line of credit, get the proper debt tool that we need so that we can do velocity banking with and be on our merry way. What is a line of credit? I just want to lay out the criteria, okay, what you should be looking for when you're reading the terms and agreements, when you're setting up appointments with the banker, or when you're on the website of that specific bank. A line of credit is a revolving debt. What does revolving mean? Basically means, look, if you give me $10,000, okay, you gave it to me. That means I now owe you 10 grand. That's a loan, right? You just gave me a loan for 10 grand. Now I owe you money back and you set up a fixed amount of payments. What if you have 10 grand, okay, and I need that 10 grand, right? And I'm going to ask you for 10 grand. But I'm going to say, listen, I don't need it all at once, okay? I need 2 grand today. I need 2 grand in 2 months, and then the rest 3 months from now. Okay, so what you do is you give me access to a account that I can log into, all right? Let's say you're the bank, and you're going to give me a separate account, okay? It's going to be tied to a checking account, tied to a savings account, okay? Tied to any, maybe a business account, a personal account, okay? And this account is going to say that I have 10 grand to use at any time. If I decide to take 5,000 or 1,000 or 3,000, however much I decide to take, I can pull from this account, which is called the line of credit, okay? Which has an available credit of 10,000, okay? When I take money out, let's say I take out 5 grand, however much I take out, I now owe 5,000. Even though you gave me 10 grand, right? Technically, you gave me 10,000 to use at any time. I'm only using what I need, okay? So that revolving it's open, it's available. I can use it anytime. I can take money out anytime, right? And now here's the fun part. When I go to pay it back, okay? Let's say I use 5 grand today, and then in 2 weeks, I pay it back in full. I'm only going to have a payment, right? Because whenever you take out a loan, you're going to have a monthly payment, okay? Well, with a line of credit, instead of me owing 10,000, having a monthly payment based off 10,000, my monthly payment is going to be based off 5,000. Now, the interest rate, okay? Every loan, every line, every borrowed money has an interest rate, correct? Yes. Okay, cool. So the interest rate is based off the amount of money that I borrow, okay? So you gave me, the bank, you're the bank, you gave me 10 grand and you say, hey, Denzel, I'm going to charge you 10% on that $10,000. Okay. Well, if I only use 5,000, you're only charging me 10% on 5,000 for however many days I have that balance outstanding. Let's go over everything I just said, just to recap, because I don't want you to get lost. I don't want you to get confused. I know this could be very simple in theory, but when you actually do the action work and you call the bank and you ask the questions, let me tell you something. Those people that you're talking to, the banks, you, right? In that example, you, the bank, that's offering me the line of credit, majority of the people are not going to even know what the heck you're talking about. So you must be prepared. You must have your proper questions, proper information in line, so that when you approach the banker, you can ask them questions in a way that you make them understand so that they can provide you the tool that you need. Okay? Like I said, simple in theory, very complex in the action part. All right? So let's just go over it again. A line of credit, it's a revolving debt. The interest is calculated daily based on however much money I have outstanding. Like I said, if I owe $5,000, I'm going to owe 10% on $5,000 on a daily basis. So we will break down the math. I'll give you an example, okay? The monthly payment, when I took out that money, it's based off what I owe, not the total balance, okay? Also, a line of credit, there's no collateral needed, okay? You have unsecured and you have secured. When we're doing velocity banking, it is nice to have unsecured, meaning no collateral against the debt tool. You don't have to put anything up like a home. You don't have to put up your car. You don't have to put up your own money to get the line of credit, the unsecured version, okay? The payments are not fixed, okay? So if I owe $5,000 this month because I took $5,000 out and I pay back $1,000 in that same month, okay, next month I'm gonna owe $4,000 and some change. My monthly payment is going to be less than the first month that I owe $5,000. If my monthly payment is less, then that means I get charged less in interest. So in theory, if I do it right, I can save myself a lot of interest savings, okay? When we apply the velocity banking method. And we'll go over an example, okay? So we have that laid out, okay? Let's do an example. I have a $10,000 line of credit, okay? You, the bank, you gave me a $10,000 line of credit. The interest rate is 13%, right? You say, hey, Denzel, you're going to give me 13% on this 10K. Let's say I took all $10,000 out all at once, okay? That means that if it takes me an entire year, okay, let's just say that I took this 10 grand out and I plan on making payments to pay it all off in 1 year. If I take out 10,000, my interest cost will be $1,300. The way you get that math, right? You just take the 10,000 times it by 13%. Boom, you get $1,300. That is what we call the yearly cost. Okay? Yearly. By the year, not by the day, by the year. $1,300. How do we figure out the daily interest rate? You take that $1,300, divide it by 365 days, boom. You'll pay somewhere around $3.56 a day for however long you owe the 10,000, okay? Now, here's what gets interesting. As you pay down this debt, right? Let's say I took out 10,000 all at once in the month of February, okay? And 30 days from now, I pay back 2,000 bucks. Okay, now I only owe 8,000. Now you have to recalculate to figure out your daily interest costs for that month, right? So you just take the 8,000, times it by 13%, you get a number. Divide that by 365, you'll get a lower number than that, okay? Now, with that being said, that is how the interest works on a line of credit. Why do you need to know this? So that you understand the proper debt tool that we're trying to acquire. The main difference, okay, because when you go to a bank, there's two types of products. There's loans and then there's lines. Those are the two main differences, okay? Loan, line. What is the difference? A loan, right, is typically calculated amortization, okay? That word simply means that if you give me, the bank, $10,000 and you charge me the 13%, you are handing me 10 grand, right? Off the bat, right away. Not 10,000 in an account. You are handing me 10,000. You are putting it into my checking account, okay? That is not the type of credit line we want, okay? You want a credit line that's revolving, right? So you have this, so this amortization, okay, you need to know the difference. Line of credit, all right? Loan. You gave me a loan for 10 grand. At the 13%, you are going to give me a fixed monthly payment, right? Main difference, right? Line of credit, payments are not fixed. With a loan, payments are fixed. No matter what, whether you owe 5,000 in 5 months from now, or 8,000 or 9,000, 3,000, the payments will stay the same. They won't change, right? Monthly payment will stay the same every single month. Now, with the line of credit, since my payments are not fixed, that means that you're giving me the same dollar amount, but I'm going to get charged less in interest. Now, why is that? Is there a difference? This is a huge debate that people have on the internet, and I don't know why for the life of me, at 23 years old, I'm talking to people that are double my age, and they can't seem to tell the difference between a loan and a line of credit. They can't seem to tell the difference between daily interest rate and amortized interest rate, okay? Amortized interest rate, the interest is pre-calculated. It's front-loaded on your monthly payment, okay? No matter what, it's preset in there. Has to be paid every single month. The only way to drastically lower that interest rate is to pay off the balance, right? Or to pay off a significant amount of the balance. With a line of credit, we are getting charged daily interest rate. Daily, okay? So if I'm getting charged daily, that means my interest needs time to accrue, okay? I'm going to stress really deep on this because I really want you to get this, okay? People are having a lot of difficulty. People are applying for the wrong crap, all right? And I'm talking to people and you're not getting it, all right? So we need to get it, okay? Especially if you've been watching me for some time and you're just clueless. That's okay. That's okay. It's going to take time. The more videos you watch, the more committed you get, the more engaged you become, the more questions you ask. It's just like riding a bike, right? You get on it, you fall a couple times, you get back up, you become an expert at it. That's what I want you to do with this stuff. Lines of credits and loans, all right? I hope I can be clear on that. Now, we've got the criteria of the line of credit. Now, what do you ask the bank, okay? When you call, there is a couple of things that we can do prior to setting up that appointment with the banker, prior to walking into the office, to walking into that bank, okay? First things first, these unsecured personal lines of credit, you are going to find them primarily at your local credit union, okay? There are local credit unions. There are nationwide credit unions. There are a few major banks that do offer personal lines of credit. What I want you to do first is look at your local credit union. Why? Because typically that local credit union services the local community only. You have to be a resident to be a part of that specific bank, okay? A part of that specific credit union. So if that's the case, they provide extra, better rates, better service for those specific residents. That's why I want you to go to them first. Now, another thing you're going to do is you're going to check your credit. You're going to review where is your credit score at, okay? Where are you at financially? What's your debt to income ratio? What's your utilization? All that crap, right? From the whole 6 factors of your credit score, take a look at it, learn about it, see where you stand, okay? Now that you know where you stand, now that you have found the local credit union, you can go onto the website. You can go onto the website first and search around for the banking products that they offer. There'll be a services tab. It'll say banking products or banking tools, okay? Look at it. See if you see something that says line of credit. If it says line of credit, click on that. See what it says. There are going to be many different terminologies. This is to confuse you, okay? But whenever you see the word line, that is a primary indication that you're on the right track. When you see the word loan, that should be a red flag, okay? You should raise a red flag and be like, let me keep looking. Let me see if they altered the word to try to confuse me, okay? Because they will do that. It's on purpose. It's part of the money mastery game, okay? It's part of life, right? Nothing's fair. You just got to get it down. You got to learn it. Learn their system. Play by the rules. You win. So, you see that it says line of credit. The next thing you're going to look for is the word revolving. See if you can find that anywhere in the description of that banking product. They will explain what this is. It'll say, this is a express line of credit. This is a term loan. Okay, don't let that confuse you. Term loan might just mean a line of credit, okay? Because lines of credits have a window period, just like HELOCs. HELOCs have a 10-year or a 20-year, right? Or unsecured personal loan has what? Like you can do a 3-year, you can do a 5-year, you can do a 10-year, a 7-year, right? Or a car, a 5, a 7-year. That's just saying term loan, okay? Don't get confused. Look for that word, revolving, see where it's at, okay? So you found the word line, you found the word revolving. Now I want you to look for that word, daily, and this word, interest. I want you to look at the interest rate that they offer on this revolving line of credit. Just jot that down. You're going to need to know that, okay? And then I want you to say, all right, got the line of, I see the line of credit, I see it revolving, I see the interest rate. Now, how is that interest rate calculated? Okay? This is where you can either call the bank if you don't see it in the description or in the terms and agreement, okay? But you should see something that says daily periodic interest rate or daily interest, or it'll say APR, okay? Annual percentage rate, okay? Right in front of APR, I want to see something that says daily APR is, and it'll do this. You'll see that 13%, but then it'll say 0.0253812, like it's gonna show that. Why? Because basically what they did was they took the 13% and they divided it by 30 days, okay? And that's how your interest is calculated, okay? Now, you've seen all that, okay? Once you have gotten all that information down, you have your notes, you found the credit union, you found that it said revolving, that it said daily, that, you found the interest rate, you found the next thing is how much do they offer the line of credit, okay? What is their max? Maybe it'll say 3 to 50,000 or 3,000 to 20,000, 3,000 to 25 or 1,000 to 25, okay? Get that information down. Okay, cool. Now you're ready to call the banker. Now you're ready to call the bank, have a conversation, to set up an appointment. Why do you want to do that? You want to go into these local credit unions because, mind you, they don't have customers all over the world. They just have you and the local residents, okay? The reason why I want you to do this is all just psychology, which is building rapport with the bank teller, with the bank manager, with the underwriters. Get to know them. These people are going to be your best friends, okay? In terms of doing velocity banking, get to know these people. Learn her name, learn his name. Set up that appointment so that you can reiterate the questions that I've laid out for you, so that you can reiterate all the information that you got off the internet, plus your research, everything. Why do you want to do this? You want to be so sure that you have the right line of credit. Why? Because there's many different types of lines of credits. So, in another video, I'm going to go over the different types of lines of credit. Okay, I hope this was real helpful. I hope I managed to go real deep into this, okay? These are your starting steps. These are the pre-game work to doing velocity banking, okay? My name is Denzel. Hope you enjoy the rest of your day. God bless you, and go get that line of credit.